And by the time I reached 20, which was 2000, I made 20 lakh rupees.
Wow. कुछ लोग होते हैं जो बहुत पैसा बना लेते हैं. How does that happen?
Yeah, it's how they're thinking about risk.
What is the stock market and how does one begin to navigate it?
Fear, greed, and hope. These are the three main emotions which work in the market.
Let's say somebody wants to start investing in the stock market. What is step one?
First, learn, then select the strategy, start small, practice, go back to basics if required, and then go full-fledged.
What, according to you, is the mindset that one should have when they're entering the market?
What are my core beliefs about money? Do I have scarcity mindset or do I have an abundance mindset? I love the combination of spirituality and trading.
What, according to you, are the key factors that influence stock prices?
Everybody was talking about stock market because it was the time of that Vishal Mehta thing. If you want to become lambi race ka ghoda in stock market, learn to cut your loss. That's the curriculum most of the top CEOs apply in their companies.
How do we avoid fear and greed from clouding one's judgment?
If your why is stronger, your how gets easier.
Easier.
It is a sitting and waiting that makes money.
This week, we have on our show Vishal Malkan, a stock trading expert with 27 years of experience, and Meghana Malkan, a lawyer turned high-performance coach. For 15 years, they've been spearheading Malkansview, a leading stock training and personal development institute. They have one mission: to change the way India trades. Tune in for an in-depth conversation on stock trading, the psychology behind developing strategies, tips for beginners, and the unusual connection between spirituality and the stock market. Yes, the last one surprised me too. Welcome to the Humans of Bombay show, guys. I was telling you offline that I'm most excited to have this conversation because I don't really understand stocks that much. So, most relevant for me. Thank you for being here.
Thank you.
Thank you for having us here.
And very excited to decode what it takes at base level, right? But I'm going to start with you, Vishal. You actually started trading when you were very young. You were 16 years old.
Yes.
And that's the time when, you know, you're a teenager about to go to college. Priorities are very different. It's not exactly about trading stocks. So how did that happen and how did you begin?
Yeah, that's a long story, but I'll try to cut it short. Which started in 1993 when I was in 8th standard.
Okay.
And I used to travel with my dad to Kalba Devi office. He was into textile. But everybody was talking about stock market because it was the time of that Vishal Mehta thing. So that intrigued me because everywhere in the office, in the local train, everybody's talking about stock. And I used to ask my questions to my dad that what does this mean? Bullish, Sensex. And that the number thing fascinated me, that I love numbers and I was good at maths and all. So I said, I want to explore this as soon as I finish my 10th. So when I finished my 10th, I said, I want to become a trader. And in those days, if you tell that to your dad, it's going to be a complete no. And it says, ke pura satta hai, gamble hai, koi nahi kamayega. You first get a degree. So I said, no, I'm adamant about this. So I took a college, which is next to stock market for my graduation, which is KC College. So I think that I did my graduation in stock market and part-time I did my BCom. So in this 5 years, first year I was just observing. I used to go to an office. My uncle was a trader and I used to go and just observe people, buy, sell and all that. I started learning. And then second year, I got like, I need to trade, something I know about it. And that I asked my dad about some money and there was again a lot of opposition, friction. And then he finally agreed, but he said that this is your last 5,000 or 10,000 rupees. And once that is over, you are done with the stock market, you go back to college. And I thought that I'm going to make like millions out of it, but it got over actually.
Yeah.
And then
How quickly? How quick?
I think a couple of months, maybe less than that.
Yeah.
But then once you lose money, you get wiser, I guess. And then you say, oh, I should have done this or I could have done that, but I don't have money. So again, I started studying for a year and then I started trading in my uncle's account with 1 share, 2 shares. And then I had a luck, the bull market luck, what I call, is market started going up like it did in 2022, 23. And when everything is going up, everybody makes money.
Yeah.
And I thought I'm making money out of my skill, but it was my luck.
It was a bull market.
Yeah. And by the time I reached 20, which was 2000, I made 20 lakh rupees.
Wow.
And then I thought that I know everything. I don't need to study. I'm going to be a crorepati and all that. But then the bubble busted, the dot-com bubble, 2001, everything crashed. I lost everything and more. So I was in debt by the time I was 21. Then I realized that I need to learn this. I need to master this. So I started doing fundamental analysis through doing a finance MBA from Narasimha Monji College. And I started learning technicals. Between 2001 and 2007 was my learning period. I read more than 400 books on stock market and all that. And the final my turning point of my life would be 2008, when the market crashed in January. Just before that, 3 weeks before that, I had published a report which said that markets will crash based on everything what I learned. And it actually happened, which I didn't believe myself, but it happened. And then I realized that at least now I understand something about market after this 96 to 2007.
Like you're a knack for it.
Some knack about it.
That's crazy. And like it's insane that you read 400 books in 7 years, and that's so refreshing to hear, you know, because like nowadays you just feel like people don't read anymore. You're just consuming things on Instagram and online, and you think you know things. But like you sometimes have to go back to the very basic, right? Like I have to study this. I have to understand this concept to be able to even take the step 2 in your career. So that's great. And I'm going to come back and circle back to this conversation and ask you to recommend some books later to people who want to begin their journey. But we'll come back to that in a bit. I'm going to move on to you. You have such an interesting trajectory. I was reading your profile before and I was like, she went from law to trading psychology. And I was like, I don't even know what trading psychology is. Like, I was just like, I didn't know that was like a career path that people could take. So I'm very interested to know, what is it and how did you make that pivot from law? Like, was it that bad?
So it was, in fact, it all happened because I got married to a stock trader.
Okay.
In a way. So when we got married,
to understand him.
Exactly, that's how it started. So I was into corporate law. I did my company secretaryship. I got interested into legal affairs. I did my law. And I was someone who was in love with my profession. I used to love every bit of what I was doing. But I was on a break because I was in a very hectic job. While on the break, I used to wonder, he's reading charts and tane marti thi, yaar kya hai? Anyways, it's a zero-sum game.
What is this? What were you reading?
Charts.
Charts.
So
He studies the graphs and charts, which I could make no sense out of. So that's what he says, that itne tane marti ho, go and at least learn something. You're on a break anyway. So that's a good idea. So that, the course that I joined, the basic course from our coach and the mentor, I think that kind of changed everything. I got to know that there is some sense in this, there's some method to this madness. It's not gamble. My core belief that it is a gamble, satta hai. This slowly started shifting when I started studying myself. I got very keen, that analytical mind in me, I went and did the advanced course. Slowly I thought, so I was on a break. I'd moved to Kingfisher Airlines till then. And I was on a break. I said, why not explore? Why not do that? Because anyways, going back to the hectic legal job. So that's how my journey actually began.
Wow.
And during this process, because of my own multiple failures, I realized that there has to be something more to the success here. Everybody's trading using the same strategies, but not everybody's making money.
But yet, there are those few people. Kuch log hote hain jo bahut paisa bana lete hain. How does that happen?
So luckily he let me explore that part of my own. That read about them. What do you think? And that's how I stumbled upon this market psychology. That it's not what they are doing, but it's how they are thinking.
Right.
It's how they're thinking about risk.
By they, you mean traders?
The successful traders.
Right. Okay.
So I started reading upon them a lot, doing a lot of research. What is it that makes them different, etc. That got me very keen on trading psychology. I said, this is something I need to work on.
Wow.
And things started shifting for me as I started working on them more.
But now we'll get into the basics of it, right? Like, what is the stock market and how does one begin to navigate it?
Great. So that's for everyone who's watching this, right from the basics, right? There is stock market because there are companies which are doing their business and they have raised their money through IPO, and then the company is listed on the stock market and the price fluctuate because there are buyers and sellers. Now, how do we navigate the stock market? There are two ways. One is the fundamental analysis, one is the technical analysis. When you look at fundamental, when you're looking at the balance sheet, the company ratios, what the company is doing, production, sales, marketing, products, management, promoters, everything, geopolitical situation, political situation, climate change, dollar price, oil price. Now, this is too much data for anybody to fathom. To even get the data, to analyze the data, and that much time. So that's not for the common man, it's only for people who know finance. But for a layman who has no finance background, or even for engineers or doctors, the only other option remains is technical analysis. So what is technical analysis? Basically a study of price action, which we call the charts or the graphs. What happens is, because there is some change in fundamental, there will be change in the price. Now, either we study the cause, which is the fundamental, or we study the effect, which is the price. So when you study causes, there are so many causes, which we may not be able to do as I just mentioned. But the effect is only one. The price goes up or the price goes down. Now, this price goes up in patterns. there are patterns. That's what we study in technical analysis. That whatever has happened in the past has going to be repeated in the future. So because ultimately it's driven by human beings, and human beings are all behave in patterns. Like you have a pattern, I have a pattern, she has a pattern. So and we behave in certain way under fear, greed, and hope. Fear, greed, and hope. These are the three main emotions which work in the market.
Okay.
Now, once you understand the pattern, then you can say, okay, next this can happen. When I say this can happen, it's like it's not certain that this will happen because patterns sometimes change. Like as we evolve as a human being, we also use this word like I didn't expect this from you because I was expecting the older pattern.
Correct.
So same thing when we do analysis of the market, it's a probability study that most likely this can happen. So I will take this trade. But if it doesn't happen, if the market changes the behavior, I'll take a loss.
Understood.
And that's the whole technical analysis is based on charts and patterns. It's like if I give you a simple analogy is that you look at ECG of a human being, like the heart rate, and based on ECG, the doctor will tell you whether the heart is good or bad. But let's say the heart is bad, something is wrong. Now, why it is wrong? Maybe sleep, maybe stress, maybe hereditary, maybe any other problem, drinking, smoking, whatever it is. But when the doctor looks at the ECG, he does not look at why it happened. Now it has happened. You just give the remedy. So a similar way, when the markets are going up, we don't need to figure out why it is going up. We just need to take action, which is to buy. And if it starts going down, we're trying to take action, which is to sell.
Correct.
And that simple it can become. Even 10-year-old can understand. In fact, my son is 14. He understands. He has attended few sessions. He trades very passively before going to school and after going to school. Just to understand the basics. So that simple it can get.
Okay, very interesting that you said that. But let's say somebody wants to start investing in the stock market. What is step one? What does one do? How does one begin? Can we break down that process?
Interesting.
Yes, the first thing, let's say the process is same for everything what we do in life. If you want to succeed, is to first learn.
Yeah.
If you want to take it professionally, stock market, then first study, either fundamental or technical. Now we teach technicals because that's the universal language, which the heart language we talk about, is looking at the heart of the market. And this is universally applicable because it can be traded in any stock market in the world because you're looking at the charts. So first study the charts, either through books or videos or courses. Right? We have a published book, we have a YouTube channel with so many videos, or there are so many channels nowadays and so many books available. So first study, then you decide on the strategy which you like which fits your persona. Like you are busy. Let's say you are busy completely throughout the day for your work. So you can't do something which is day trading because that requires time. You need to take fast action. So you go into passive kind of trading or investing where you don't need to track the market every day or every hour. So you have to decide on that. So first learn and select the strategy or select the tool which works for you. And then take the trading capital. Initially start slow, like it's like testing the water. Like before you jump into the pool, you just test the water, how cold it is, like putting fingers. You just trade with 1 share, 2 shares, 5 shares also. Right? And till the time you don't understand this, even if you want to still invest, the best way is to go to mutual fund. Right? That's the indirect way. But once you understand the market, that's the direct equity where you can trade. So you can buy 1 share, 2 share, 5 shares. Limit your number of shares to not more than 10 because beyond that you can't focus or you can't concentrate. But I know there is a saying which says you need to diversify a lot, but I would say not beyond 10 to 15 stocks. And just start with 1 share, 2 share. See how the strategy performs. Look at and go back to basics and change if anything has to happen. And once you get the mastery over that subject, which I think will take at least a year, right, minimum. And then you say, okay, now I know this strategy. Now I can put my full capital, whatever I've allocated, and start trading on a properly. I understand the risk management. I understand the strategy. I understand entry, exit, stop loss, everything. And my mindset is also what she does is mindset is also clear that I can follow the strategy. One thing is to know it, and one thing is to follow it, which is the discipline part. So these are the steps. So first learn, then select the strategy, start small, practice, go back to basics if required, and then go full-fledged.
Okay, that's a great way of simplifying it. 2 quick questions here, then I'm going to come to you. The first is, let's circle back to that first question, which is you've read a lot of books. What are 3 books that people can read to begin their journey?
The first one, if you want to learn about markets, is called Super Trader by Dr. Van Tharp, who's one of our mentors and coaches. He's no more, but great books. So Super Trader. Second one, another of my mentors called Mark Minervini is trading like a champion. second. Third is I would recommend the book called Japanese Candlesticks. You must have heard about candlestick patterns.
Yeah.
Japanese Candlesticks by Steve Nisson. Fourth is Trading for a Living by Alexander Elder. And the fifth one, I would recommend my book, our book. We have co-authored a book called #Cashtag.
Okay. And the second question on this is, you said the caveat in that sequence is start small.
Yes.
What is a good amount to begin?
Any amount, like the amount which you can easily lose and it doesn't pinch you.
Right.
Is the amount you pay to the market to learn. Is the fees. Right. So if I start with 5,000 rupees and nowadays you can buy one share. Let's say you buy one share of Tata Motors, it will cost you 1,000 rupees. Or you go with Tata Steel, it would be 150 rupees.
Right.
So the initial intention to enter the market should not be to make money, but to learn.
It's very interesting that you said you think of it as a fee
Yes.
to the market, to just understand and learn.
Everybody pays.
Right.
But once you know it, then you can pay less and learn more.
Okay, amazing. I'm going to come to you now and ask you, because you've understood the psychology behind this very apparently complex structure and market, what according to you is the mindset that one should have when they're entering the market? And what should they look to hone over time in the market? Right.
A very good question, and I wish people who get started trading in the world of trading and investing ask themselves this question first. So to begin with, the very first thing that we can ask ourselves before we begin is, how do I think about money? What are my core beliefs about money? Do I have scarcity mindset or do I have an abundance mindset? That is the first thing. Once we work on that, we realize that we have limiting beliefs around a lot of things, around people, around stock market, apart from having around our own success,
Right.
our own, capacity to succeed. How do we deal with failure? So it's all about working on the core basic things. We don't need any hi-fi study. Trading psychology is just opening up yourself and looking within yourself. And that is why I love the combination of spirituality and trading.
Yeah.
That is why I love it, because in essence, spirituality is all about surrender. It's all about looking within yourself. And that is exactly what we teach people to do in trading and investing.
Yeah, that's amazing. And any particular skill set or qualities ki ye agar mujhe, I want to make a lot of money, to main is tarah se sochूं पैसों के बारे में. How do you define that?
I would just define that in three things, like how we have a pyramid called be, do and have pyramid. In the same way, we made something which is called, what are your core beliefs around things? What are your core habits? And what are your core desires? These three things taken care of, they build you a successful pyramid to succeed. And this is, I believe, not only just for investing, it goes across everything. But core, if you really want to succeed at making passive income from stock market, you just have to pin down these three things.
Okay. And I'm going to come back to you now. We've spoken a lot about these overarching themes in the world of trading. What, according to you, are the key factors that influence stock prices?
As I said, there are a lot.
Correct.
Like, as from management to promoters to world markets, to oil price, to dollar price, to sales data, to competitors, to unorganized market, to everything. Even a small announcement here and there by a minister would change the market price. So there are a lot. So now but the sad part is we can't control any of that.
Correct.
The only thing what we can control, which we should be controlling, is where do I enter the stock market? When do I buy? And how much I can risk? Means where do I book my loss? These are the only two things which is in your control. The rest is up to the market.
Right.
And if you focus on these two things and manage it well, and survive in the market, remember the word is survive is in the market, is to stay on the pitch for long enough, you automatically start making money.
Okay. And on that note, what are orders and how do they work?
The orders are like, you put a buy order, which is like, I want to buy a stock. So I'm going to buy at the market price. Let's say the price is trading at 120 and I'm ready to buy at 120. So I'll say market order. But I'd say, I think that 120 is too expensive. I want to buy at 115. So I'll put a limit order. Limit means I want to buy at 115. If the market comes down to 115, then only I'll buy.
Okay.
So those are buy market orders and limit orders. Okay. And there's third thing called stop loss orders. Let's say I buy at 120, but I want to make sure that if it goes below 110, I'll exit. So I'll put a stop loss order, which is stop your loss and say if it goes below 110, I will exit my position. So these are the three basic or main kinds of orders which we put in the market.
Okay, good. So we put up like a little bit of a chart here for people to be
Yeah.
like, this is what orders are. Okay, let's go a little bit deeper, right? Like, what are some of the strategies that investors use to trade, to invest?
So I'll speak from technical background, like most, like there are, if you look at the people like Warren Buffett or late Shri Rakesh Jhunjhunwala, they were looking more on fundamentals and less on technicals. But there are enough number of people who are not so popular as these people are, but they make tons of money using technicals.
Correct.
And in technicals, you can have a gamut of trading strategies. There are ways to do, there are what we call as value investing, and one is called momentum trading.
Okay.
Value investing is when a particular stock has gone down and it comes at an important level. When I say level, it means support. Like
Correct.
let's say recently last year, all the IT stocks, especially like Wipro and Infosys and all those stocks came down, and they were at important levels where you can say it's a value buy. Value buy means I buy at a very low risk, but the future potential is great. So that's called value buy, but it will take some time. So you are patient for that. And the second way of trading is called momentum trading. The momentum trading is not buying when the stock is going down, but buying when the stock is actually going up.
Yeah.
Like recently, when we put in our videos, like the stocks which are going up, like Tata Motors or DLF, they crossed their all-time high or 15-year high. Now, it's a simple logic that if the stock price has gone above their 15-year high, means the company is doing fantastic.
Yeah.
Then only it will go. And that is in momentum. So what happens is at 600 Tata Motors becomes 1000, which is a big jump in just 3 months.
That's crazy.
So that's called momentum trading. So these are the main strategies. So you can diversify your portfolio. You can't always do momentum trading because that will require some kind of skill, because human mindset, typically it's the beliefs which we are talking about, we have been taught to buy things cheap.
Yeah.
Bargain.
When you're going down, you buy.
Bargain, discount, sale, all that happens when you buy. So our mindset is not attuned that why should I buy a Tata Motors which was trading at 300 sometime back, now it is at 600, it's expensive.
Let it fall back and then maybe I'll buy it.
I may be buying at the high, so why should I buy expensive? So, but that's the belief we have to change, right?
Okay.
If it's going up, that means the company is doing great, so you should buy more, and there's on the upside, there's a lot of room. It can go anywhere. Like it actually went from 600 to 1000 within 4 months.
Yeah.
So you can diversify between value buy and momentum buy.
Okay. So what is the mindset here that we have to kind of, he said, you have to change the mindset. So what is that change that is necessary? What are we inherently born with, and what do you need to kind of think about differently to change your perception?
Yeah. So what we call is, we differentiate, we call it two names. Like one is the cultural environment and one is the market environment. Cultural environment is one example he gave, where we are taught to buy in sale. We love it, right? When we shop from sale, we get a different kind of satisfaction. Saste mein mila. And that's how it works here. Second thing that comes up, which we are taught and which is good in normal life, is never give up. Kabhi give up nahi karna hai, hope nahi khona hai. But the same thing when you apply in the market, that thing needs to shift, because in market, what happens when you don't give up? You buy a stock, it keeps falling. You think, oh, I don't have to give up. You keep holding it. So just stop loss ka concept is what you have to stop your loss. You have to limit the money that you lose in the market. That goes for a toss because you're not stopping your loss.
This is also what you were earlier saying about spirituality. There's a lot to do with detachment. You can't be so overly attached to a particular outcome or a particular situation or scenario. Ki I'm waiting for 200 only. Yeah. When the reverse is happening. Okay. Let's get on to mistakes. You've said a few common mistakes that people make while investing. But for beginners, especially, what are the top 3 mistakes that they can avoid while beginning their journey? And a couple of your own experiences to help them understand.
Sure, yeah. So the first mistake we do is that we depend or rely or listen to tips, calls, views, all those things. Like people give tips and everybody is an expert. Now, when it comes to any other profession, like let's say if you have a heart problem, you are not going to ask your neighbor, what should I do? You're going to a heart specialist.
Yeah.
But when it comes to investing, everybody's an advisor, an expert, and you listen to them, you put your hard-earned money on them, and then you lose. So that's your first mistake. The second mistake is, most people lose money in stock market is because of over trading. You don't know your risk. Right? How much you are going there to make money, but I would say you are going to there to test how much you can lose and still be in the market, still be on the pitch, and keep looking at the market for the next 3 to 5 to 10 years. We look at it as not as a 1-day match or a 2020 or a 5-day match. It's a lifelong game. So when there is an end to the game, you're thinking about winning. But this game is not ending. So the game is not about winning. The game is about surviving.
Yeah, staying out there for as long as you can.
As long as you can.
Right.
And the third one is, of course, you need to learn. Like most people think you don't need to learn. Once you make money in a bull market, you think, I know it. Why do I learn? Right. So learning is important, and then only the earning will happen. So these are the 3 things which most people follow. And I have been part of all these mistakes.
Really? Yeah.
But luckily, I had one lesson which I learned very early in my life when I was 16. When I used to go to that stock market building, the Bombay Stock Exchange, and I look at Bombay, I think of that.
Yeah.
Bombay Stock Exchange. And I was just a teenager. And I used to go into an office which was full of traders. And I was like the youngest person there, standing in a corner and looking at people. Every day I used to go and write something on my notebook, said, okay, this was a stock, Tata Steel, Tata Motors and all that. There was one old gentleman who was like an expert. I'm here since 15 years because I learned one thumb rule of market. And that I can give you right now. If you want to become Lambi Race Ka Ghoda in stock market, listen to this. And that thumb rule is, you know what? That learn to cut your loss. Learn to book your loss. If you learn to book your loss, either you cut your finger or you cut your hand. And this lesson was so powerful. In this 27 years of my journey, I've done a lot of losses, a lot of blunders, but I've cut my finger, sometimes my wrist, but I never let it go to my hand or my neck, which I see every day people doing.
Yeah.
They lose everything in one stock or one trade or one market crash, and they are like selling houses and stuff like you hear those fearful stories. Why? None of the stock goes from 100 to 0 in one day. You have 100 to 90. Market gives you a chance, by exit kar, chota loss hai. But your ego, your hope, your greed,
your
and
belief
you stay.
system.
Your belief system.
Yeah.
And then you blame the market that satta hai, gamble hai, speculation hai. First of all, nobody invited you. You are there because of your greed.
Yeah.
And then you lose the market and you blame people or
Yeah.
blame market, doesn't matter.
Yeah.
So this is one lesson I learned, and I still book losses, but I know I have to cut the finger. I need to stay on the pitch.
I need to stay long.
Stay long.
Okay.
The game is not getting over.
Okay, very interesting, and I think very good advice that people will definitely take. In light of all of this, right? Like, say I'm entering the stock market, and I'm very inspired, by the way. I'm going to start like reading. How important is it to develop an investment strategy, and how does one even begin to do that? Like, say, like you're just a beginner, and you have like a decent size. Say, like, okay, you have like 20,000 rupees to begin your journey with. What is your investment plan? What are the elements that you should have while structuring it?
All right. So first thing, this especially I'm looking at, let's say when you have 20,000, you're talking about youngsters who start just making money.
Yeah.
First lesson you need to learn is stop instant gratification. You need to learn like delayed gratification. So that's the lesson for all youngsters. Put everything what you earn, except for the necessities and all that. Understand what is a need versus want.
Yeah. Yeah.
Do I need this 15 or I can manage with 10? I just need to make calls, right? And once you understand that, balance money, you start investing. If you don't know, as I said, start with mutual fund.
Correct.
Once you know, like you start reading, start applying, knowing the strategies, start putting into direct equity, and then build a long-term portfolio. Like, as I say, value buying you can do with half of your portfolio, and half of it can be momentum trading.
Correct.
So this is how it should be started. Even 20,000 is enough to buy 5 stocks. You can buy 3,000, 4,000. That's the best part. The entry barrier into stock market is very minimum.
Yeah.
You just open an account, you buy, you can invest 500 rupees also, buy 2 stocks.
Yeah. Yeah. Okay. Understood. And on that note, when you're building this strategy, there's also a little bit of risk management that you need to do, right? Because you don't want to lose. Nobody enjoys losing money. Even though you said it's a fee to the stock market, you still want to be secure and sure that, okay, let me at least cover my bases.
Right.
So what are different risk management strategies that one can apply?
Simple is that there are different formulas. Like over this study which I've done for so many years in so many books, there are so many complicated formulas to have your perfect risk management strategy. But I would say that you should risk the money which you lose and it doesn't affect your sleep or your financial status is the risk management you need to follow.
Understood.
So if you buy a stock and assuming it's going to go wrong for sure, and where do you cut your loss? Let's say I buy at 100, I'm going to cut my loss at 90. And if I bought 1,000 shares, it's going to lose 10,000 rupees. Can I lose 10,000 happily? I'm using the word happy. We call the happy loss. if you don't do happy losses, the losses get bigger and become sad losses. So in a trade, there can be 5 outcomes. One is the big profit, small profit, break even, small loss, big loss. You just avoid the big loss.
Yeah.
Anything else is okay.
Okay. Last question in this segment is actually on diversification. Earlier you were saying, that everybody believes let's just diversify, but sometimes that can lead to a poorer outcome just because of the fact that you're losing control over how much you bought, what you're doing, especially for a beginner. What is the optimal level of diversification for a beginner?
Okay, so this I learned the hard way, and there are 2 ways we have learned from childhood, like that you should not put all your eggs in one basket.
Yeah.
And you should diversify. Now, 2 ways to diversify. One is within different asset classes. So you put in stocks, you put in gold, you put in property, you put in other crypto or whatever people are trading. Or within stocks, if I have to diversify, I would diversify between sectors or between long-term and short-term, or momentum and volatility, or value buy. So for me, how it works is, what I learned from like listening to all billionaires, that whatever part of your brain understands that asset class, you put that much money into that. So for example, I understand 100% stock market, or I don't understand property or art, or maybe that much of gold. So I'll put all my money into stock market. Now that will sound ridiculous based on what we have learned, that don't put all your eggs in one basket. But I know the basket well, where it can leak, where it can cut, where it can go wrong. So understand one asset class properly and put money there. And within that asset class, let's say I put into stocks. So I'll put into stocks 2 ways. One is to the indirect, which is mutual funds. So they will manage, I'll have an average return there and I can put it for long term. And one I will manage on my own, which is direct equity, where I buy value buys for my long term portfolio and I do momentum buys for my short term portfolio. So that's how I diversify.
Okay, to summarize this, what are the key takeaways that we can take on a mindset level? To summarize everything that he said on a technical level, what are some of the basics that people who are just about to begin their stockbroking journey can keep in mind?
So I think to summarize everything that we've just discussed, the key thing is that when you trade, when you invest in stock market, it's like any other profession. You need to educate yourself. Trading can become a successful business as well, where he talks about systems, he talks about methods, he talks about, strategies. So what is a strategy? It's a business. If I want to manufacture this glass, it's a strategy. It's a process.
You have a plan.
Yeah, it's a plan. There's a plan. You know your risk. There's raw material, there's manufacturing happening, and there's output. In the same way, we can turn this into a business.
Right.
Follow the process, not the profit. Focus on the process, not on the profit.
Yes.
Okay.
That's what it is.
Okay. And in line to that question, because that's a segue into the next segment, is when y'all began Malkansview, which is in 2008, like you were mentioning, there were a lot of institutes, and there continue to be a lot of institutes, and not even institutes, there just continue to be a lot of people on YouTube who are giving like knowledge, right, on this particular topic. What was that one USP that you guys wanted to build this institute on, and why? Like, what do you think was the most important thing that was missing that you want to fill?
So when I was into stock market at the age of 16, and I used to go to that building, and people used to make fun of me. The old people, they said, okay, बच्चे लोग का काम नहीं है इधर, तेरा काम नहीं, loss हो जाएगा and all that. And somewhere I could not respond at that point of time because of my age and because of what I know. And somewhere in depth, I know that I need to make it so simple that even a 10-year-old can understand.
Yeah.
So the whole journey, what we try to do, we have learned a lot of strategies, a lot of mentors and coaches and books and all that. Out of that, we pick the best and we implement it. And these further simplify so much that even actually a 10-year-old can understand. So the main USP of Malkansview is simplicity. We want to we have testimonials of Uber driver or a farmer or a homemaker or a security person who knows the strategy and trades. I go to airport and I meet securities checking and I say, sir, aapka video dekha.
No way.
And strategy chalta hai, aapka GFS, RSI strategy chalta hai. And then I feel that, okay, the mission we have is working. So that's
anybody can understand.
That's the program what we have called Anybody Can Trade. And we involve a lot of mindset part and this habits part. So you know that we have taken this exclusive rights of 7 habits.
Yeah.
Stephen Covey,
Oh,
Franklin
okay.
Covey.
Yeah.
So we have the curriculum with us, and we believe that as a trader, you need to learn those 7 habits to become a better trader investor. But as a human being, because I think that's the curriculum most of the top CEOs apply in their companies, those 7 habits. And that's, even if the kids attend those 7 habits, that's worth their time and effort, because it will help them in their studies, it will help them in their life. So we believe in this 360 transformation. We call it mind, body, and soul, and work on your health, wealth, and relationship, and not only on market, on making money. For making money, enough YouTube channels, enough videos, enough strategies available for free. Even our strategies are for free on YouTube. But when you want to transform yourself as a complete person, like a 360 transformation, that's when we jump into it.
That's more like holistic.
Holistic,
correct.
Yes, that's the right word.
Right, understood. What are the 7 strategies? If you can quickly just tell me what are the 7 habits.
The 7 habits. The first one is be proactive. The second one is
begin with the end in mind. So what is it that you want the final outcome as?
Yeah.
And then you start
what's
working
my goal?
towards
Yeah.
it. Yeah.
Yeah.
The third one is think win-win.
Win-win.
And the fourth one is put first things first. That's a habit of productivity.
Prioritization.
Yeah, prioritization. Yeah.
Okay.
That's important.
And
The next one is on empathy. Seek first to understand someone and then seek to be understood. So first listen to
first
people.
listen
Very
and then
nice, yeah.
talk. And the sixth one is synergize. Synergize is you work with people. And the last one is sharpen the saw. Like you work on your mind, body, and soul continuously.
Mind, body, heart and soul. So
Heart
4
and soul.
quadrants. You see to it that every single day you give time and invest your quality time into each of the 4 quadrants.
Wow. And it's very interesting, and we were chatting offline that you guys have the happiness program of Art of Living attached to this program.
Yes.
Which is very rare because the two seem so different, right?
Yes.
One seems so left brain, the other is extremely right brain. What was the reason? You also mentioned spirituality in the context of trading. So what spurred this decision to include this in the curriculum?
It's a mix of 2 things. I've been, as I said, been associated with the Art of Living more than 23 years now.
Yeah.
And then I had this thing that one day, like I really want to combine it, how I'm doing it in my personal life. I want my students to experience the same.
Wow.
And who better than Gurudev to
Gurudev,
really help. So the entire curriculum is embedded. So we have this 1-year program where we help people become professional traders. The entire curriculum of Art of Living is embedded and is part of this 1-year program.
So fascinating.
So when they get started with the happiness course, then they move on to Sahaj, and then they move on to advanced course.
Yeah.
So that's how it's like, and then what happens is you start speaking the same language. Like how we start talking in terms of habits, you start talking in terms of same language. So that makes it beautiful.
It's holistic. Basically,
Yeah,
you can't just be like, okay, now I just want to make a lot of money, but your mindset, your inner alignment is also super important to kind. Okay, fascinating. I'm going to get into the next segment, which is called Ask the Expert. So what we've done is we've put certain scenarios, certain questions, and we want your perspective on it.
Great.
Okay. If someone is investing in stocks for the first time, how do they identify potentially profitable stocks, and what should they consider before their first purchase?
Perfect. So we have a kind of a process called top-down approach. So what we do is when we first top-down approaches go like from broad to narrow, which is where we look at the global markets, like what the global markets are doing, US and UK and Asian. Then we come to Indian markets. In that Indian markets at the top, we have the indices, like what is the Nifty and the benchmark Sensex is doing.
Yeah.
And then we come to sectors. Now, you know that every time there's a different sector moving. Sometimes the auto works, sometimes the pharma works, sometimes the IT works. So from the top down, from the world markets to Indian markets to the sectors.
That's the process. Okay. Similarly, at what point does one understand that a certain stock will continue to make losses? Like what you were saying earlier, right? Like the market gives you an indication that you're wrong. And what are some of the red flags to watch out when analyzing for potential investments?
Okay, so the first thing is usually we call it that there is like the initial movement or the first thing. Like whenever I buy a stock and in the next few days, if it doesn't show like profit or if it doesn't move up, and that gives me a feeling that I made a wrong decision or I've taken a wrong trade. And usually those are the trades which actually land up in the loss.
Yeah.
So that once you have analyzed everything properly, the price action and the patterns and what we teach in technical, then if you buy at the right price, it should show you profit at the right within like few days. If it doesn't, it hovers around and slightly goes down and then goes up. That means it's not performing as per you. So that's the first red flag, of course. And the second red flag is that it should not disturb your sleep.
Okay, perfect. This question is for you, Meghna. How can one manage the emotional roller coaster of the market? And how do we avoid fear and greed from clouding one's judgment?
Yeah, beautiful. So the first thing is managing emotional roller coaster is the simple solution is to have a regular meditation practice, because that is what helps you center into yourself. When you have a regular practice of meditation, hope, greed, fear, failure, all these are going to be there. You cannot avoid them, but you can work on yourself to deal.
So these help you avoid like a clouded judgment when you're
be
meditating.
more objective.
Right.
The other thing is, if you want to be more objective, is you have a strategy clear that this is the process. This happens, I buy. This happens, I sell. I don't listen to anybody. I don't look at anything. I don't feel anything. I just do the strategy.
Surrendering to the process.
It's like the thermometer versus thermostat, right?
Yes.
Thermostat is you control the temperature. Thermometer is you're controlled. Okay. The next one is actually a very interesting question, very relevant, because with AI and algorithms, there's so much out there. What do you think? How do these kind of new age technologies impact the market?
I don't think it impacts, it makes it better, that your analysis, your data, whatever when I started, I used to go and draw manually charts, like draw literally on the graph paper, 1996, 97, 2000. And now with one click, you can actually look at any chart in the world. Plus with AI, you can actually program stuff and say, okay, give me signals here and there. We call it not AI, but algo trading. So it becomes more automated and more convenient, so that even a common man can trade. They don't have that much time to scan through 500 stocks. But just click one button, you'll get those 5 stocks which you want that category to be. And then you take a call. So it's only getting better. But at the same time, if you think that AI is going to take over, it never. Because ultimately, it is driven by human emotions. Okay. Stock market is made up of human beings. Human beings are all of emotions. The same cycle of bull market and bear market are going to continue for the rest of our lives and beyond that. So we just need to identify those patterns and trade them.
Okay. And the last question to actually close this segment, which is actually a very interesting topic because it combines a lot of different facts that we've spoken about. Do women make for good traders? And I'll ask you why. Because A, there are not a lot of as many women traders as there are male. And 2, it's because of what we're talking about, emotions, right? Like generally, stereotypically speaking, the female gender is considered to be more emotional. Whereas men are typically considered to be more left brain. It's a theory. I'm not saying this. Please don't come at me. So how do you think women make for in the stock market?
Well, it was surprisingly, it's the other way around. Women make better traders than men in the stock market.
Okay. So why do they make for better traders?
They make for better traders because women by default are better at diversification. They are by default better at following the process. Look at how we manage homes. I'm sorry again. It's just something that comes in naturally, right? The way
you can juggle many things.
You juggle many things. You think about it objectively. Ask a woman to throw a party, host a party, and see how flawlessly things turn out.
First, they are more conservative, so they will not take unnecessary risk like we will take. They are risk averse.
And we forget that traditionally it's the women of the house who managing the finances. Jiske paas tijori ki chabi hai, right? So it just comes naturally. We are naturally money makers. So I think we should capitalize on our potential and do most of it. I personally get you can see body language, this question, I get very pumped up when it comes to women and trading. I stand up for this cause.
Okay, so women, let's take the cue. we must not be intimidated by this process, and it's easy once you get into it. I'm going to get into it, so we'll figure that out. Okay, the next segment is actually busting myths, right? There are a lot of myths around the stock market, and it's this fascinating industry where people want to come, don't want to come, have these preconceived notions. Investing in stocks is like gambling.
Yeah, so it is gambling if you trade it or if you invest like a gambler. Without knowledge, just go and trade, just buy on guts and gut feeling and whims and fancies and listen to tips. But if you do it as a business, like a process-driven thing, then it becomes a business.
Okay. Investing in stocks is easy and you can get rich very quickly.
Half is right. It's easy,
but
getting rich quickly is not the answer, because anything to make it big, any industry, you have to takes time. You need to master the skill. You need to give yourself time.
You need to invest in stocks all the time to make money.
No.
It's the other way around.
The other-
Actually.
We do it, we call it seasonal business. Like there are trending markets and there are non-trending markets. So when the trends are good, so you make all the money for the rest of the year.
It's like my favorite quote from my coach, Jesse Livermore, is he says, it is a sitting and waiting that makes money,
Wow.
not the doing, which is so true.
Yeah, it brings us to the end. We have one last question to summarize, and I've learned a lot, so I'm really excited for people to watch this episode. There are people who definitely want to elevate their lifestyle, right? By making more money. It's only natural. And they often do turn to the stock market. And while there have been a lot of tips on beginners, on how to sustain, how to stay there for long, what is a key piece of advice you would give somebody who's looking to enter the stock market to elevate their life and to make that abundance of money?
So I'll give my side of it, is that it's got to be a process-driven thing. You take it as a business, as not as a gamble. So if you are building a business or building a profession, you study first, practice, and then go into the market. So it's a process, and delayed gratification is the word we need to use.
Yeah, and for me, you remember the pyramid that we spoke about,
Yeah.
the three things? I would just say, ask yourself one question in each of the three things. So first, when it comes to belief, what is the core empowering belief that I can have, either about money or stock market? Second is, what is that one empowering habit that could take you to the next level? Is it reading? Is it being in touch with more positive people? Is it learning more about your money habits? What is it? And third is, how strong is your desire to be financially independent? Do you really want to be financially independent? Because a lot of that, the research says, and I've seen that in my career as well, a lot of your success is dependent on how badly you need it. Your desire is going to be the driving force.
Yeah.
So ask yourself, do I really desire to be here? Or is it just out of curiosity? A lot of people come to us just out of curiosity.
Yeah.
मैं देखूँ इसमें क्या होता है, मैं देखती हूँ पैसा बनता है कि नहीं. That doesn't get you anywhere.
Okay.
So that last thing what we believe strongly is the Jim Rohn quote, which says that if your why is stronger, your how gets easier.
Easier. Yeah.
So what is your why to come into stock market? And once that why is beyond money, then it will become easy. If your intention is only to make money, which everybody wants to make money, then it won't work, or it will be very tough.
Okay. Thank you so much. It's been a amazing balance between right and left brain, and like understanding the psychology of money and also just understanding the basics. I think people are going to have a lot to learn. So
Yes.
Thank you so much for doing this, and excited for people to begin their journey.
Thank you so much for being part of our mission, helping us spread the message.
Thank you.
Thank
Thank
you.
you.
Thank you for being the best community, and we'll see you in the next one.